Hello and welcome back to the Rekt Capital channel, and welcome to today's video update. In today's video, I'm going to be talking about the 4-year cycles for Bitcoin. So here we are on the Rekt Capital website. Let's dive into the article. And of course, this article was proudly sponsored by Clio.one, one of the partners here on the channel. And what we need to talk about when it comes to the 4-year cycles, Bitcoin's price cyclicity is pretty evident if we dissect it into 4-year cycles. So the past 8 years, if we just dissect each of these candles, and remember guys, these candles are 12-month candles. So this is the 12-month time frame. Each candle represents 12 months. So approximately 1 year's worth of price action. We have 2 4-year cycles going on at the moment. And if we look at each of these cycles, what does each stage, each phase of this cycle really stand for? So in this article, that's exactly something I talk about. Phase 1 being the exponential highs. It's in this phase right here where we see a lot of euphoria, a lot of optimism, overconfidence in the market, really pressing price to new all-time highs in the end of this wick, before finally actually rejecting a very key resistance. A key resistance I'm going to talk to you guys in a bit, but this is where the euphoria really takes price to new all-time highs and we actually peak before entering phase 2. So phase 1 is where all that euphoria and FOMO enters into the market. This is where retail investors really do FOMO in and prolong that cycle to unsustainable highs. And this is of course where the bubble bursts. This is the very top of the bubble, the very peak, and this is where we enter into phase 2. And phase 2 essentially is where we see a corrective period. So phase 2 is the correction where we follow through from the euphoria of the previous 12-month candle, and of course we have that correction in the psychology, because even though we had previously a lot of buy-side pressure, a lot of euphoria and FOMO, this second phase is where it corrects for all of that over-exuberance, all of that over-optimism and overconfidence in the market, and we have a correction in the market psychology which brings things back to a stable sort of sense when it comes to price action. Investors lose their interest in Bitcoin for the time being. People get a bit more fearful towards the asset. They start to get more pessimistic. And of course, at the top of this candle, or at least near the top of this candle, is where a lot of the bottom buyers, people who bought into Bitcoin earlier on in the cycle, this is where they take their profits. And because they have a large amount of Bitcoin, given the fact that they bought that Bitcoin at a much cheaper price level earlier on in the cycle, this is where we have a lot of sell side pressure mounting, and a lot of people do that. And then this sell side pressure really starts an acceleratory, cascading sell side movement towards the downside, where loads of profit takers actually start to be okay with taking profits at lower and lower and lower price levels. And this cascading really does materialize into a strong correction, which takes price to deep retracement levels. And of course, this corrective period precedes the bottoming out phase, which is phase number 3 in the cycle, phase number 3 in the 4-year cycle. So we see a volatile retracement all the way towards the bottom, which is where bargain buyers start to accumulate within a ranging period. And bargain buyers are essentially the people who start the very beginnings of a new cycle, and this is where they accumulate at the very bottom. So this bottoming out phase is essentially where we see a slowing down in the sell side momentum from the previous corrective period of phase 2, and this is where we start to see the very beginnings of accumulation and recovery after an extended correction. So a waning in the sell side momentum begins over there, and of course we see that bottoming out. So bargain buyers are very key to starting this process, because they actually start the beginning of a new cycle, and it's FOMOs who come on later in the cycle, who buy in later in the cycle, that allow for continuation to occur. So even though we look at the bottoming out period being the maximum point of pessimism and fear towards Bitcoin, this is also where bargain buyers actually see the most promise and the most risk to reward, where the ratio of risk to reward is most appealing to them, because the risk is really small compared to the prospect of reward that potentially awaits them. So once the bottom is in, this is where FOMOers do dive into the asset. They start to buy at higher and higher levels, and this is what achieves, or at least allows for, a continuation in phase 4. And phase 4 is essentially the very beginning of this recovery. And if you want to think about it this way, this is essentially a U-shaped reversal from the bottom and starting into that continuation after that recovery. So phase 4 is very important for the very beginnings of that continuation, not only thanks to the bargain buyers who really started to kick off the cycle, but also to the FOMO buyers who are prolonging this continuation. And the thing to mention about phase 4 in this respect, it's very important to just note how this resistance of 740 was the resistance that actually stopped candle 1, the euphoria. It stopped that euphoria coming into the asset. This is essentially what stopped Bitcoin from going to higher and higher levels. So we registered that all-time high over here, and we rejected from this resistance of 740. We had that corrective period, then we had the bottoming out period and the recovery. And this candle number 4, phase 4, is all about continuing after that recovery and closing on the 12-month time frame above the previous resistance that stopped that euphoria and overexuberance. So candle number 4 is a very important thing, a very important element in this 4-year cycle, because this is the candle that precedes further exponentiality to new all-time highs. This is essentially the role of candle 4. And if you can see, candle number 4 is essentially the time frame that we are in at the moment. We are in this phase of the 4-year cycle for Bitcoin. And of course, if you just want to really quickly go over this 4-year cycle, exponentiality after that continuation over here from the recovery, from the bottoming out period, and of course, after the exponentiality of this candle over here, which it peaks at the all-time highs of 20,000, but essentially speaking, it rejects at 14,300, we see a corrective period in the form of candle number 2, a very deep retracement, similar to the psychology that we had over here, but much more stark in its retracement. Number 3 is the bottoming out period, and number 4, which essentially at this point in time, roughly speaking, resembles candle number 3 from the previous cycle. And of course, these are reversal candlesticks. These are hammer formations which precede a bottoming out period. The best way to think about a hammer in this case is that they hammer out a base with the wick and jump up into a new rally. So they're hammering out a base before bouncing off into a new rally. And essentially speaking, candle number 4 right over here is looking quite good for the time being. We still have 6 months for this candle 4 to really close above a very key level, which is 14,300. And it's quite interesting to note because many people think of 20,000 as being the psychological inflection point, which is going to really shift how people think about Bitcoin. So anything below 20,000, people think of Bitcoin as, it's been there before, nothing too really interesting. But if they think about Bitcoin above 20,000, that's where Bitcoin is going on to new highs. And this is where people suddenly experience a shift in that perspective towards Bitcoin, and where FOMO is much more likely to occur and people are talking about Bitcoin in the mainstream. Essentially speaking, 20,000 is that psychological inflection point when it comes to the mainstream. But on a technical level, it's very interesting to note that 14,300 is actually that level that's going to cause this FOMO and interest to really ignite once again. So a close at the end of 2020, 31st of December to midnight of the 1st of January of 2021. This is where we really need to see Bitcoin close above 14,300 for this 4-year cycle to be valid and precede an exponential rally in the form of phase 1 of the new 4-year cycle, which would actually take us to new all-time highs, because every time we have a phase 1, we rally to new all-time highs when it comes to Bitcoin's price action. So as long as the preceding candle 4, phase 4, closes above a key resistance that stopped candle 1 in the very first place. And this key resistance is 14,300. So that's something really to get excited about going into the end of this year. But what I also want to talk to you guys about is the halvings and how these Bitcoin halvings situate themselves in the cycle, in the 4-year cycle. And this price positioning of the halvings is really interesting because here's halving 1, roughly speaking, here's halving 2, and here's halving 3. And of course, these are 12-month candles, so these aren't the correct dates of the actual halvings, but these are the years of the halvings, which is essentially my point. So in a case of each halving, halving number 1, this candle preceded an exponential rally towards new all-time highs. This Bitcoin halving number 2 was where we saw that continuation in candle 4, which preceded an exponential rally towards the upside to new all-time highs. And now Bitcoin halving number 3, we are once again at candle 4, really battling for that continuation, following this bottoming out period for Bitcoin to really rally towards 14,300 and close above it. Its historical price positioning is very curious to me because it always precedes a exponential rally in the next 12-month candle. The Bitcoin halving precedes exponential rallies to new all-time highs. And if you guys remember my Bitcoin halving and its effect on Bitcoin's price action, you'll notice that there is a lot of confluence there. And this 12-month chart, this 4-year cycle, is a very good testament towards the historical tendencies that the Bitcoin halving has on Bitcoin's price. And that's the fact that Bitcoin's price tends to rally exponentially after the Bitcoin halving. And this 4-year cycle showcases that phenomenon, that historical tendency, in a very neat and simple way. And having said that, guys, that's about it for the article. If you'd like to check out this article and read it in full, it's on my website. I'll leave the link in the description down below. But in the meantime, please consider dropping a like if you like this video, and of course subscribe for more videos like this in the future. I'm Rekt Capital and I'll speak to you in the next video. Speak soon.